On Friday, we saw stocks selling off only to close the day out with a hammer candle. However, there's a few things that suggest the stock market could be in trouble. On Friday, we seen every single indice in the red, and more importantly, we come over and look at advancing issues versus declining. On Friday, we had 78.1% of issues declining on the day. Then when we come over and we look at advancing issues for the NYSE, and notice right there, we only had 18% of issues advancing on the day. And actually look at the last 3 days. Each of the last 3 days, there was less than 30% of issues advancing on the day. Once again, giving us a heads up, the breadth most certainly has weakened out here in the stock market. Now, when we look at what happens after we had 3 days back to back where advancing issues have been less than 33%. However, this does not bode well for the very next day. We can see there's only a 42% chance the stock market is actually going to be green, in this case, come Monday. Now, I know there's a lot of fear mongering out there about Black Monday, the stock market crash. However, I don't think it's here yet. Do I think stocks have a problem moving forward? I most certainly do. But when we look at this stat and we look at 3 days later, we see there's a 75% chance they start going up. And then as we progress through time, we can see that this breadth reading may not be as bad as it first seems. Now, as we look at this graph right here, we can see that we had the most weekly outflows in equities for the entire year. Now, is this a problem? Are people just being paranoid? Is this tax loss harvesting at its best? Or is this a true warning sign that, hey, maybe it's time to get out of town? Maybe, just maybe, it's not time to and try to buy up here near all-time highs. Now, we can also see fear has started to creep in. How do we know? We'll take a look at the VIX. We can see on Friday, the VIX shot up and made it up as high as $18.44. However, when we look at this on the 5-minute chart, we can see the VIX started to sell off, and we kept talking about this during the live stream. I was actually hoping the VIX would close up more than 10%, which would indicate that either Monday or Tuesday, the market would likely have an adverse reaction, aka mean we would get some type of bounce in the stock market. However, we can see the VIX did close down below 10%. But when we look at the fear and greed index, notice we are still dead smack in the middle of fear. And like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. Now, in terms of being fearful, I don't think the market is fearful enough in terms of, blood in the street, time to go all in, YOLO, buy, all that fun stuff. But there is a chance that we run to new all-time highs. Look at the market momentum, for instance. We can see it's starting to indicate there's a little bit of fear in the market. We look at net 52-week highs and lows on the NYSE, and notice this is one of the lowest readings we've seen so far this year. Look at the stock market price breadth, which is similar to what we talked about a few minutes ago in this video. Notice how low it is. Very, very low. The breadth is extremely low. And again, we can go ahead and try to ignore all these warning signals out there, but in the end, it'll just end up biting us in the rear end. We come over and look at the most recent investor sentiment survey. We can see the bulls have dropped down quite a bit. And most of the bulls that dropped off essentially flipped right over to the bearish side. However, if we look at that 37.8 reading, we can see the historical average is 37.5. So in all reality, we're not that far away from what would be deemed normal. Now, here's something else that we have to worry about in terms of the stock market, and that is going to be Janet Yellen tells Congress U.S. could hit debt limit by mid-January. What else happens in mid-January? Are they plotting something on Orange Man? Let me know your thoughts in the comment section down below. And again, we already know that under an Orange Man presidency, we've already seen the government shut down before, and we're going to see, are we going to have a battle on our hands right off the rip as soon as Orange Man is about to come into power? Now, as we come over and look at the Dow Jones Industrial Average with the top chart, down at the bottom, we take a look at transports. Notice we have this trend line on transports, and now we've been able to break above it. We're coming down, testing that level. Will we be able to hold, or are we going to see transports start to come lower, which also could indicate that Dow Jones is likely going to go lower in the near future? We look at HYG versus the SPY. Notice high yield bonds have fallen off a cliff. They essentially peaked all the way back here in the end of September as the S&P continued to grind and make new all-time highs. Are the high yield bonds giving us a clear heads up that we need to pay attention to in the very near future. Then we jump over and look at the 10-year versus the 2-year. Notice we've been inverted for so long, and then we finally uninverted. Now look at the steepening of the yield curve. Normally, as the yield curve starts to steepen, that's where a lot of problems really come into play, especially when we switch this chart over and take a look at the 10-year versus the 3-month. Look how steep that chart is starting to get. And again, this is telling us we are at or very near a recession in the market. I know a lot of people want to believe Jay Powell's narrative about a soft landing. I got something to tell you. That soft landing is going to be non-existent. Now, during the holiday season, everybody talks about the Santa Claus rally. Yeah. Stocks only go to the moon. However, I'm going to share with you guys a stat that may make the bulls reconsider what they really want to see in the stock market for this week. Now, if you want a way to support the channel and you trade with prop firms like Apex, My Funded Futures, or even Take Profit Trader, use the links in the description box down below to get the best deals. I'm going to share with you guys a stat that may make the bulls reconsider what they really want to see in the stock market for this week. And what I'm going to be talking about is, a lot of bulls want to see the stock market run right back up, make a new all-time high, maybe have this set up to be some type of A to B equals C to D structure on the way up, which would send the S&P to new all-time highs. However, not so quick, because when you look at this stat right here, when we look at the first week, December 31st through January 7th of the year, when the last week, December 24th through the 31st, prior year was positive and negative. So AKA when the time period between December 24th and the 31st is positive, notice what normally happens the following week. And we can see it summarized right down here. At best case scenario, we are 15 by 15, which means it's basically a toss up, a 50% chance we either go up or down. And keep in mind, the stock market has an overall bias. So the fact that this stat is 50-50 should give you a little cause for concern. However, when you look at when that time period is actually bearish in the market, notice the next week, aka the first week of the new year, notice we've been up 15 times and only down 5. So if you're bullish the market, you may actually want to wish for a little bit of negative price action for the remainder of the year. Now, as we come over and look at a chart of the S&P 500, we're going to start off look at the weekly time frame. Notice the candle that we have from this week. We have a wick on the top, small little wick on the bottom, and given the location, I gotta say, I gotta lean a little bit more bearish. However, it is slightly neutral. Why is that? Well, essentially the high was lower than the high from the prior week. The low was higher than the low from the prior week, which means we have an inside candle. Now, when we get inside candles, that often leads to range expansion, meaning we're going to break one way or the other. The first way we break quite often ends up being nothing more than a trap. Then as we dive down, we start looking at the daily chart. And this is where a lot of traders are saying, you know what? We have this large ABC pattern to the downside that's trying to play out. And that could be the case. However, we do got to respect the fact that we have quite the hammer candle out there on Friday, meaning sellers were able to push it down, buyers step back in, and we're able to bring it up in the later portion of the day. Also, if we grab a Fibonacci retracement, measure from the swing low up here to the swing high, notice we came right down near the 50% retracement, and that could really set the stage for a much larger ABC pattern on the way up, which would bring us above all-time highs. However, we also want to be mindful that that could be nothing more than intraday bounce, and the market is getting ready to head back lower. On the daily chart, the MACD indicator still looks bearish at the moment. If we go ahead and put on an anchored VWAP from the recent swing low, notice we are above that VWAP, and if we grab a VWAP all the way from all-time high, we are slightly below that VWAP. So we're kind of sandwiched in between those two VWAPs, and we're going to see which one ends up breaking and setting the trend back the other direction. We look out here on the 4-hour chart. We see the MACD indicator has firmed up a little bit. However, we are still below the zero line. The last 4-hour candle ended up being nothing more than an inside day. Now, when we dive down and start looking at the 30-minute chart, we can see this very clear. We can see we had a massive gap on the way down on Friday. We had a bunch of selling at the open. Then we kind of, firmed up here just a bit. And I got to ask myself this question. Could this be an inverse head and shoulder pattern on the 30-minute chart? Left shoulder, head, right shoulder over here, which could indicate we're going to come back towards gap support, or maybe all the way up here filling the gap, or maybe it ends up being a busted pattern. MACD indicator is still slightly bearish, but the MACD lines are trying to cross on the way back up. Now, if we can get above value area high, I would want to focus on this minus development area anywhere from about 595.52 up here towards 596.40. If we get above that price point, then we want to look for gap resistance, and then all the way up here for the gap being filled and maybe a run towards all-time highs. However, as we look at the futures markets, notice we had quite the sell-off. We had that little double top pattern. All those targets have been completed. And as we look at this, we can see that value area high off the weekly will come in at 6,032.75. We're gonna have the point of control down here at 6,028.75 and value area low down here at 5972.25. Now, when we grab our Fibonacci retracement, we're talking about this in the last half of last week that I wouldn't be surprised to see a pullback down to the 38%, maybe the 50 or even 61.8 level. We actually spiked through the 78.6, then started to come back up. But the fact that we came down below the 78.6 kind of makes me think that we may come back down to revisit it and maybe try to retest this recent swing low that we had in the market. Keep in mind, we saw this A to B equals C to D pattern, which could still be in play, which would bring us all the way up here, all the way above the J-Powell FOMC nasty day and above the untested point of control at 6131.75. Now, ideally what I'd like to see this week, and again, the market doesn't care about what you or I would like to see, but I would love to see the market come down below the weekly value area low and then firm back up. If we do have that transpire, then we can look to target that point of control, value area high, and then maybe try to push all the way up here towards that untested point of control and maybe all the way up, making new all-time highs. Now, as we look at the economic calendar for next week, starting off on Monday, 9:45, we have Chicago PMI. 10 a.m. we have pending home sales. Then on Tuesday, there's a lot of bank holidays out there. However, at 9 a.m., the S&P CS Composite 20 HPI year over year comes out. Wednesday, the markets will be closed. They will reopen on Thursday, and we can see that 8:30, we have the weekly unemployment claims coming out. We also have final manufacturing PMI along with construction spending. Then on Friday at 10 a.m., we have ISM manufacturing PMI, ISM manufacturing prices. Now, as we come over and look at the QQQs on the weekly chart, very similar candle to what we saw with the S&P 500. We have quite the wick on top of that candle, but once again, this is nothing more than an inside week, meaning the entire range of the candle was contained within the prior week's candle. So again, we got to be on high alert for a potential trap out here this week. Then we come over here, look at the daily charts. We can see we have that hammer candle right up here, and we have a couple anchored VWAPs that essentially we're still being able to hold. However, the MACD indicator on the daily chart is slightly bearish, but the candle on Friday, again, sellers tried to push it down. Buyers were able to come back up and push us back above 50% of that range. And as we come over and grab our Fibonacci retracement tool, we measure swing low to swing high. Notice on that dip lower, we only dipped down to about the 61.8 level. Then we were able to bounce back up. Now, if we do not go back down and take out that low, that's going to set the stage for a ABC pattern that would bring us above all-time highs at about 540.01. However, let's play devil's advocate here as well, because this could also be an ABC pattern on the way down. If this high right up here holds, then we can grab our Fibonacci extension tool, measure A to B. The B to C leg is a corrective leg, and we project right down here for D at 501.34. Also, if we add an anchored VWAP from all-time high, notice we are slightly below that VWAP. However, the other VWAPs that we have going back to the election night and such, we are still above. So we're going to see it's going to be the battle of the anchored VWAPs. Who is going to win? Now, when we look at the 4-hour chart, you can see we're kind of by the zero line. MACD indicator, however, is still bearish at the moment. On the 30-minute chart, we see the MACD indicator wants to cross back up, but like we talked about with the S&P 500, we had that nasty gap down, and we're going to see, do we go ahead and run the lows again from Friday and potentially start going lower, or are we going to firm up and try to fill the gap? Let me know in the comment section down below. Do you guys think the gap from Friday will be filled out here this week? Now, as we come over, look at the futures markets real quick. Notice from 2 weeks back, we had this minus development area. What do we do this week? We essentially filled that area in. However, this week we have another minus development area. Well defined. I'm going to classify this week's profile as a B as in boy. We have a double distribution, and I love these profiles because it's quite common for us to come back into this area. Now, the first time we come into the minus development area, I expect the market to either consolidate or potentially reject and come back lower. And if we grab our Fibonacci retracement tool measure from the swing low to the recent swing high, notice we dipped in between the 50 and 61.8 fib level, which is exactly where we'd expect some type of bounce to take place. Now the question is, do we form a lower high and then simply start to go back lower? Because we already have a high, lower high. This is going to be another lower high over here. Are we going to be able to breach back above that level or not? Keep in mind, I am going to be highly focused on this minus development area, and I'm going to be looking for signs of possible rejection. If we can get to the other side of that minus development area, it increases the probabilities. We're going to go ahead and take out the highs from last week, go ahead and try to run up and undo that J Powell candle, and maybe even hit the untested point of control up here at 22,301.5. Now, when we look at the volume profile levels real quick from last week, 21,647.25 will be value area low. The point of control is going to be up here at 21,982.25, with value area high being 22,065.75. Now, ideally, I would love to see Sunday night have the market go ahead and start squeezing on the way down, only to pop right back up, get us below value area low, pop back above it. Then we have a weekly volume profile rotation trade on the way up. And again, we'll be monitoring this during the live streams. If you guys want to make sure you don't miss the next time I go live, make sure you're subscribed and that you have the bell notifications turned on for all. Now, as we come over, look at the daily profile, notice we have that huge minus development area. And notice we also closed above value area high. You guys know my MO behind that. Whenever we close outside of value, I expect that area to come back and get tested within the next 1 to 2 days. So when we look at value area high, that's going to come in at a price point of 21,696. The point of control will be way down here at 21,542.25, with value area low being 21,517.75. Now, if we do get below value area high, I would want to go ahead, instead of using the point of control as target number one, I would prefer to use two different target locations. This first high volume node at about 21,642, then the next high volume node at about 21,591. Keep in mind, as we start coming back down towards this area, anytime we enter a minus development area, aka valley within the profile, it's highly likely that we could see some type of bounce around that area. Now, if we do make it up towards that minus development area, this is where I'm going to look for signs that, hey, maybe the market gets a little bit tired and it wants to pull back down. If we can start breaching 50% of the minus development area, then I want to target this little structure breakdown point right up here at about 21,897. Now, as we come over, look at the Dow Jones, notice basically a candle of indecision. However, it was not an inside day, basically a spinning top type of candle, wick on the top, wick on the bottom. And the wick on the bottom in this case is larger than the wick on top. MACD indicator is still bearish at this moment, and I'm still looking for signs. Is this going to be a higher low, or do we come down and maybe make an equal low or even possibly lower than that? Also, we jump over and take a look at the Russell 2000 real quick. Notice the Russell 2000 is dipping back lower and is getting very close to these candle wicks down in this area. Now, is the Russell 2000 giving us a heads up? Will it be the first one to break this recent swing low that we had in the market? And will the other indices follow if that takes place? We jump over and take a look at the dollar index. Dollar index basically consolidating up here near these highs. And with the dollar, let's not forget, we do have an ABC pattern completion at about 110.13. Also, we take a look at the 10-year yield on the move up on Friday, up again after having two shooting star type of candles. And we have an ABC pattern up here, which completes on the 10-year yield at about 5.03. Now, if the 10-year yield gets up that high, that's going to be problematic out here for the stock market. Also, with the yields and the dollar going up, we would expect to see gold continue to go down. On Friday, gold was down once again, and really gold is in jeopardy of coming down towards about 25.42 to about 25.69. Now, if we breach that, that could set a much larger ABC pattern down, and we're going to see, does that swing point get taken out, or can we get above this high volume node and maybe start trying to trade up higher from here? Now, if you guys like to see the pros and cons of Take Profit Trader, Apex Trader funding, and my funded features, make sure to watch this video right here.